Hey folks, welcome back to episode 15 ICT 2024 mentorship. This is going to be the wizard version. This video is going to be a little smaller. I will give you the information I have got from that specific episode. So I'll put them at the same time. If you are really studying this ICT 2024 mentorship, after watching this video, I promise you brother, there will be some question that will arise in your mind. I'm not going to explain everything over there because that will be my opinion. I don't want to add my opinion over here. Instead, I would love to express every information ICT has expressed over there. So when you will see there is some question, ask me to the comment box. I will just give you the reply so that your questions or your doubt will be clear. So let's go to the video. Before going to that video, I would love to request you, don't forget to give me the thumbs up and subscribe to my channel if you are new. This is Nasdaq daily chart. From this daily chart, you have to remind just two things because when I'll be in 1 minute chart, there will be thousands line. So you will get lost in that lot of lines. That's why just keep that in your mind. This line, I'm just going to make it much thicker. So this line is the daily sell side imbalance, buy side inefficiency high. Keep that in mind. This line and these four lines. Okay, this is the buy side imbalance, sell side inefficiency. High of that buy side imbalance, sell side inefficiency, upper quadrant 50%, lower quadrant, and the low. Keep these two lines in your mind. Don't forget them. Okay, now I'm coming in 1 minute chart. Trust me, you will lost over there. So this is that specific area where I have this nude opening gap, this nude opening gap, this new week opening gap. Inside this new week opening gap, I have today's new day opening gap. So this two black line is today's new day opening gap. Remember this thicker line, daily sell side imbalance, buy side inefficiency. This is that line, and this is that 4. That is high, upper quadrant 50%. The red one is the 50%, lower quadrant, and the low of that daily buy side imbalance, sell side inefficiency. If you look, go to your regular trading hour, you will see this is the opening gap. Okay, so this is the opening gap from this is the 9:30 open and this is the closing of yesterday's PM session. So this is the gap. This is the 50% of that gap. As market, in this episode the 50% was not important, so I'll just keep it below there. Okay, I'll just keep it below there. And remember, if you go to your regular trading hour, this is your first favorable gap. This one. Just let me let me show you from here. Okay, this is the first favorable gap from regular trading hour. If you go to electronic trading hour, you will see that there is another favorable gap after 9:30. That was the first favorable gap, but from the regular trading hour, this is your first favorable gap. Now ICT wanted to use this favorable gap, the lower one, not the upper one. When I will be in electronic trading hour, you will see that. Don't worry. But ICT told that he is interested to use this one, not that one, which has created after 9:30 from regular trading hour. So I will go back to electronic trading hour. This is that gap market didn't close. Okay, this is that gap market didn't close, and this is that first favorable gap after 9:30 I was talking about. Okay, so I would love to mark this favorable gap over there. ICT is not interested to use this gap. Instead, ICT is interested to use that gap. I will keep this gap over here as ICT actually used that gap over here. Okay. Now, first ICT wanted to see that market will go at least the 50% of the opening gap that was over there around that area. But market actually trade the upper quadrant of the opening gap. Opening gap upper quadrant at the same time the 50% of daily buy side imbalance, sell side inefficiency. I told you to remember just two things from daily chart. This is that high upper quadrant 50%, lower quadrant and low. Okay, as you can see, market has traded the 50% of the daily buy side imbalance, sell side inefficiency. It has traded over there, then it went through this gap. Okay, it went through that gap and then it come back again to this upper quadrant around that area. After trading this upper quadrant, it was just before the Fed chair Powell speak, so you are not going to trade around that area. Then market went higher by using Powell speak news. Okay, so it went higher. Where did it came? Remember the another line from daily sell side imbalance buy side inefficiency high. It tapped over there to that exact area. ICT was looking for this fair value gap and that fair value gap, and he told that he doesn't want to see price will accumulate here. So he wanted to see it will close above there. Now ICT wasn't looking for buy. The same way I was also not looking for buy in my life. I told that if market keep going higher, that is going to be difficult for me to take buy. But instead, I would love to see market will keep falling for this area and obviously this today's new day opening gap. Okay, so ICT is also not looking for buy, but he actually explained the price action over there. When he saw this buy side imbalance, sell side inefficiency from 1 minute chart, and then market started to go higher, trade through this high and above that high. See this high. He was expecting that market will reach until this new day opening gap. Until that new day opening gap, market came lower again, trade that area, then he marked this parallel gap. So his first expectation was market will trade this parallel gap. After trading that parallel gap, market will go for this sell side imbalance. That sell side liquidity, this low and that low, they are relatively equal lows. So he was wanted to see that market is going to take that sell side liquidity, but at the same time he told that this is the price action which is really frustrating, and it is, to be honest, this is expected after Fed Chair Powell. It is really so frustrating price action most of the time. What market has done? Market went through this gap, then it went through the new day opening gap, tapped to this new day opening gap, then went higher to this relatively equal highs. ICT told if market when market tapped to this new day opening gap high around that area, exactly to the high of this specific new day opening gap, at the same time daily sell side imbalance buy side inefficiency. He told if market would love to keep going higher, it should go over there with speed. Okay, so he got one candle speed, but the very next candle started to fall. He was very happy to see that fall, and when this fall appeared over there, he told he wants to see this candle, this parallel gap will be broken. Okay, so at the same time, he was looking for this small parallel gap. Let me show you that. He was looking for sell, so he was interested to see this parallel gap will be unfilled. A little portion of this parallel gap will be unfilled. As you can see, market actually tapped to the low of this specific parallel gap, and then market fall. When market came here, he told that he doesn't want to see body will close above this new opening gap. Yeah, wick can go until the daily sell side imbalance buy side inefficiency. Until that area, market can go over there. And as you can see, market perfectly tapped over there. Body closed inside this new opening gap, then fall. He wanted to see it is going to be unfilled. It was unfilled. Then market closed below this parallel gap. See this parallel gap which has created over there, the trap. This is the trap. People who are new in ICT concept, they will think this is a sell setup. No man, it's not the sell setup. Market is going to make you the trap over there. So at that time, when market actually break this parallel gap one more time and then went lower, trade until the 50% of that week, the reaction of that gap, that 50%, market sent the price until this specific fair value gap, and as you can see, it perfectly trade the constant encroachment of that specific fair value gap. That was the trap fair value gap. This is the area where you are going to take your sell. Until now, you are building your confidence by reading the price. Can market trade until this new, that's daily sell side imbalance buy side inefficiency high? Yeah, it has traded. Did body close inside this new opening gap? Yes, it has closed over there. Market went lower, used this parallel gap, though ICT didn't want to see this two candle the way it was trading. He wanted to see that market will just close below this parallel gap with speed. But it is what it is. Sometimes shit happens, right? So it actually traded over there. He wanted to see this gap will be unfilled. There will be unfilled, and as you can see, market actually tapped to the low of that gap. Then it closed below this trap parallel gap. This is called, I'm just marking it as a trap parallel gap. That means TRAP, trap. Okay, so trap parallel gap. ICT didn't say that, but I'm just telling you this because this is called the trap. Makes this type of trap. Okay? So this trap parallel gap closed below this trap parallel gap. After that, when it come back again to this trap parallel gap, that is your selling opportunity. You are going to take the sell over there. This sell side liquidity is going to be your target here. Okay, and as you can see, market has traded the 50% of that gap, then boom, market has taken this sell side liquidity. So that was the price action ICT explained, and his entry was over there around that area somewhere here, 82, I guess it was here. He actually took his sell from there. I really don't know why he actually pushed his button over there. I didn't get anything over here, but ICT is ICT, so there is no comparison with ICT. Market perfectly went lower, trade there, then took this sell side liquidity, and all of this business you can see. So that was the thing from ICT's today's video, where he actually read the price. I mean, he just did the tape reading. That was just the tape reading. There was the parallel gap. Market went higher by using that Fed chart. I will speak how it has traded around that area, and when you are going to build your position or your entry opportunity by reading the price tick by tick. When you will see that market is working with the algorithmic price term, you will get your confidence and you will push your button from the specific level that you are thinking that going to stop the price and send it where you would love to see market will go. So guys, that was all from this video or this episode. I know it's gonna be a very small video, but still, if you have any kind of confusion, then please don't forget to let me know that to the comment box. Okay, so until the next video, cheers.